Hello, everyone. This is Aaron Johnson with the Dwayne Johnson Group and Bridger Financial Services. It's hard to believe that 2024 is over, but it is, and what a year it was. So I'm going to start off with a recap of the fourth quarter of 2024 and get into a little bit about what we see going on for 2025. So in the fourth quarter, the election took center stage, and the market slowly crept up as we avoided any major upheaval during the historically volatile month of October. Then, with the uncertainty of the election behind us and an additional rate cut of 25 basis points at the November Fed meeting, markets took off in what I'm calling the Trump trade 2.0. Sectors like traditional energy, oil, gas, financials, and defense were once again at the forefront, viewed as beneficiaries of potential Trump policies. Small caps reemerged once again the same way they did back in June when it appeared Trump would win decisively after his debate with President Biden. Small caps are seen as benefiting from potentially lower regulations and red tape now that Trump has been elected. The election was pretty unambiguous. Concerns about a contested election didn't materialize, as we pretty much knew the result by the time we woke up on November 6th. Despite the forecasts, the election wasn't close at all. Trump won the Electoral College 312 to 226. He also was the first Republican to win the popular vote in 20 years and received the most votes by any Republican presidential candidate in history. The Republicans also flipped the Senate and maintained control of the House. So yes, the results were definitive. The voting public was eager for change and showed that in the polls. So now what? Trump will attempt to get some things initially that were very popular, things like securing the southern border, lowering energy and food prices, and trying to limit the size of government. Other things are up for debate, such as Trump's desire to impose tariffs in order to gain concessions from other countries. The market was glad for the certainty once the election was over and the rally was back. The Dow added nearly 2,000 points during election week, and all three major U.S. indices set new records in the fourth quarter. The Dow passed 45,000 points for the first time. The S&P 500 blew through the 6,000 level, and the NASDAQ above 20,000. Also, the price of Bitcoin surged above $100,000 for the first time. The incoming administration is perceived to be more crypto-friendly, with Trump vocally signaling his support for cryptocurrency. Then there was the announcement of the creation of the Department of Government Efficiency, or DOGE, which is a tongue-in-cheek hat tip to the cryptocurrency DOGE. Trump also tapped Elon Musk and Vivek Ramaswamy to lead the department, which will seek to streamline government and hopefully make it more efficient. Talk about a Sisyphean task, but this is one area that I am most excited about after we get a handle on our national security. The impact on our domestic fiscal situation would be immense and may actually lead to reducing the country's debt burden. That would be a game changer for us economically. But entrenched interests will likely seek to undermine those efforts. It was hard to find much to complain about in the fourth quarter since the election was behind us. Third quarter GDP came in at 2.8%, showing the economy is still pretty solid. The few flies in the ointment are inflation and long-term interest rates. Inflation appeared to be stuck in the 2 to 3% range. And with the Fed cutting rates, it's unlikely we can expect further declines in inflation, given the Fed's current posture. Longer-term rates, specifically the 10-year Treasury, were unconvinced that inflation would be tamed, and with government spending where it is, chose to ignore the Fed, and longer-term interest rates actually rose. This held back markets for a while, but the 10-year finally relented, and markets took off again. If the DOGE is successful and energy prices come down, we may not need the Fed to do anything else. The price of oil, which currently stands around $70 per barrel, was steady most of the quarter despite tensions in the Middle East. Once we start producing more energy here, the likelihood of world events disrupting or contributing to energy costs will decline. The nationwide average price for regular unleaded gas is around $3 per gallon, which is about where we were this time last year, but still not as low as it was 4 years ago. We can and we need for it to go lower, which will help reduce inflation. Bringing waste out of the government will free up money to pay down our debt. Eventually, those savings can be used for more productive endeavors and result in a higher standard of living. Earnings in the third quarter increased with the fifth straight time on a year-over-year basis. But again, there were signs of deterioration as people spent more on less and are carrying higher credit card balances, which is extra painful with higher rates. The U.S. consumer continued to spend as we head into the holiday season, but signs of fatigue are evident. The good news is that there are no recessionary fears currently like we had before, and a recession is nowhere on the horizon. But all bets are off if the consumer stumbles. Right now, it looks like the Fed has lost the initiative and is plodding along, reacting in real time to the same data we all see. One final note on the Fed. Right now, expectations are for the Fed to cut 0.5% in 2025. We may see the Fed funds rate of around 3.5% to 4% as we close out 2025. The yield curve is once again inverted, but it's mostly flat. Spreads are relatively tight once again. In fact, they remain at all-time tight levels and are virtually on top of each other. This just reinforces the benefit of buying government bonds since you're not being compensated for any additional risk that you'd be taking on. Now, on to 2025. I expect 2025 will start as 2024 ended, but as the administration changes, I expect some shine to wear off. We're not seeing a recession in the first half of 2025, but inflation worries do persist. The Fed may have to pause rate cuts before inflation goes in the wrong direction. We will also have to grapple with the reality in Washington as expectations, which are pretty high right now, will run into usual government dynamics as the parties dig in. A major battle from an economic or a market perspective is the extension of the Tax Cuts and Jobs Act, which hopefully Congress can make permanent. The Trump administration will continue to put pressure on the Fed to continue to cut rates. Other things to watch is how effective the new Department of Government Efficiency, or DOGE, will be at cutting costs or streamlining the government. And how expansive will tariffs be, including who and what goods will they be imposed on? There seems to be a lot more potential for downside surprises rather than additional exuberance given the current market levels. Experts completely missed the magnitude of the rise in the markets in 2024. Hardly anyone predicted 5,000 on the S&P 500, let alone 6,000. But here's the thing. Forecasting is just a fancy term for guessing. For 2025, I'm already seeing estimates of the S&P 500 declining 12% to all the way increasing a positive 15%. So forecasts or guesses are all over the place right now. I expect to have a better idea of where the markets are going once we see how aggressive the new administration will be at cutting government spending, bringing energy costs down, or possibly adding new tariffs. Remember, investing is an exercise in planning and execution. Failure to plan is planning to fail. Although equity markets have an upward bias, rising 75% of the time on average, that doesn't mean you can sit back and be complacent. Portfolios and their underlying exposures change over time. Rebalancing should be part of your planning process. Think of it like gardening. You need to nurture, weed, move things around as part of your bigger plan. The same thing goes for investing. Remember, we still have the rest of the world out there, and it's entirely possible that something could pop up and send the market spinning. I believe the market in 2025 will be a good one. We expect the first half of the year to be pretty good, the summer to be fairly slow, and then for an increase again. But there are going to be challenges. New developments are almost always guaranteed given the new developments that we've seen over the past few years. There will always be something new that we have to factor in. Happy New Year, and here's to a strong start to the year. Thank you for your trust and confidence in us, and welcome to 2025.